Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, it's a pleasure to be back on Discovery Watch.
John, is there any light at the end of the tunnel for Scandium International and its search for a critical metals recovery hosting site?
Well, Jim, we talked about that on January 8th. The stock was trending up. Everybody was excited. Rio Tinto had told us more about its plans for the Sorel Tracy Scandium recovery unit. They were going to start with a 3-ton per annum pilot plant, and they were going to scale to 12-ton per annum. There was all this buzz, too, about ESG. And, of course, the topic of critical metals. It was not becoming any weaker under the Biden administration. So everything was looking up for Scandium International. They first announced their critical metals recovery plan in May of last year, but then absolute silence. My subscribers, when they call and leave a message, they never get a return call. The corporate presentation is still the same one they posted in February last year for the March 2020 PDAC. It still talks about the letter of intent strategy to develop offtake orders through collaborations with various end users. That was pretty much a bust at the end of a 2-year cycle, 2018 through 2019, where they worked on that. Last year, of course, was tough to work on anything because you couldn't travel, so it was stalled. So the company, we assumed, was completely focused on negotiating a hosting site with one of the dozen or so copper oxide SXEW mines in the United States. And nothing seemed to be happening until early November when the stock started to tick up. It had been languishing at 10, 12 cents. And by the end of the year, it was at 25 cents. And by mid-January, it was, trading 30, 35 cents. So the market figured they must be close to a deal by now. But now everybody's starting to wonder, is there something seriously wrong with this company? Why can't they update their corporate presentation and at least tell us that we are, for now, pursuing this critical metals recovery strategy? And as a reminder for those who perhaps are hearing about Scandium International for the first time, they filed a patent late last year for recovering critical metals, including scandium, from the raffinate that oxide producers such as Freeport pump back onto the heap leach pile after they strip the copper out of the leach solution using solvent extraction, and then they use electrowinning to convert that copper into copper cathode. The United States produces about 1.3 million tons of copper from this particular source, and Freeport represents 80% of that output through its seven mines. There's 2 more operated by ASARCO, which is now owned by Grupo Mexico. There's Lisbon Valley, which apparently has gone bankrupt. That's the old Constellation Valley bankruptcy which a private equity group revived, and it was open pit mining from the Lisbon Valley project in Utah, but that seems to have stalled. And the newest kid on the block is Excelsior Mining, which is doing in situ recovery leaching of the Gunnison project in Arizona. And they got started early 2020 and then had some problems with COVID logistics, and also there was some clogging in the recovery pipes. So they spent last year pretty much working on that, but early this year they reported making cathode copper, so they've got the Gunnison system working. It's an in situ recovery thing where you do not have an open pit. You drill holes into the ground and you pump the acid into it and it leaches through. You pump it out the other side. You do solvent extraction, get the copper out, and you pump the raffinate back. Well, what SCY pretty much invented in 2019 was a method for cleaning these other metals that are in the raffinate that unintentionally get dissolved by the acid. and they filed these patents. They didn't tell anybody about it. We actually found out about it by doing a close read of the 10K annual report that they filed in late February of last year, where we asked, what is this copper leaching thing about? And they finally were reluctantly forced to put out a press release that, yes, we are shifting our strategy to recovering critical metals from these leach operations. Now, you would think Freeport would be really eager to do something with these guys. Grupo Mexico, that's questionable whether they could get anything going. Excelsior last year wasn't really in a position, but they're probably a good candidate now. They just raised $31 million at 95 cents, and they got sideswiped by last week's sell-off in the resource sector. But they would definitely benefit from having a critical metals recovery circuit in there. And if they manage to do a win-win hosting deal, they would even get some upside beyond just collecting their copper-based cash flow. But the company's failure to even update its presentation and say, we are pursuing this, the unwillingness to put out a press release, that's really bothering people. Where are they? Have they even talked to any of these companies? Have they been shown the door, or are they in the midst of the final strokes? Maybe next Monday they announce a deal that knocks everybody over and really sets this thing going. And the company's $1 million US in the hole. They just filed their 10K on Edgar. And here's the other peculiar thing. They got a delinquency notice from the BC Securities Commission for not filing an annual information form. Well, they've never filed one before. And then the delinquency notice disappeared the day later, and an annual information form was filed on SEDAR. But when I looked at it, it was the 10K annual form for 2019 they had already filed on SEDAR on February 28th of 2020. And it wasn't in the format of an annual information form. So that was really puzzling. And then we found out that the 2020 annual report has been filed on Edgar. And because more than half of SCY stock is owned by American residents, they are forced to be an SEC filer. So all their filings are in the American SEC format. And that deadline was earlier, like the end of February or the 1st of March, whereas the TSX filing deadline for annual reports is March 31st. And in every prior year, they have simultaneously filed on Edgar and SEDAR. But this year, there is nothing on SEDAR. It's like, okay, for people who just monitor the Canadian regulatory system, we're going to do a just-in-time filing on SEDAR on March 31st, whereas on Edgar, well, anybody who knows how to dig through that system and find it, they get to do so. And I've done it, and I've done a line-by-line comparison between 2019 and 2020, and it is significant, the sea change and focus that has happened within the company. They don't, in their general marketing stuff, really make it clear what they're doing, but you can see when you look at all the descriptions, and of course an SEC 10K is a pretty dry document in a horrible-to-read format, but there is a ton of information in there, and in the absence of the company updating its presentation, I do recommend that anybody who owns this stock or follows it should go to Edgar, track down the 10K filing that was done on March 1st, and go through it. There's some really interesting stuff. For example, to their list of things that they hope to recover, they've now added the phrase high purity alumina. And high purity alumina is like 4 nines, 5 nines. It's made from smelter grade alumina. Generally, the Chinese dominate that market, but they only get it to 3 nines. The battery industry needs 4 or 5 nines. Making it is a big deal right now because they may end up needing a lot of it. It's going to be possibly part of the electrolyte within the lithium-ion battery. And this company has added this, even though they've never peeped a word in a press release or corporate presentation about having anything to do with HPA. And then here's another thing. In their list of patents granted, one showed up from 2013 that the company got for recovering boron from certain tailings leachates. And this was granted in 2013. And apparently when Rio Tinto processes its boron evaporite beds near a place called Boron north of Los Angeles, there's also lithium in there, and the lithium is an inhibitor for recovering the boron, which is the primary material that Rio Tinto recovers from this operation. But they can't recover all of it, so a bunch of the boron ends up in the tailings. And so Willem Divestine developed a method for recovering the boron, and obviously nobody's adopted it. They're not getting any license fees from it. So why, after not keeping it and having it in that list all these years, is it suddenly in there? Well, maybe it's because removing boron is a key step from recovering lithium from various brines. For example, Bolivia has the world's richest lithium reserves with its salars, but they're basically not being commercialized because there's a lot of magnesium and boron in there, which makes it difficult to recover the lithium, because you want pure lithium. You don't want it mixed with other stuff. So maybe this patent, they have this method, is useful to allow them to go into this lithium space and start to help recover lithium, not because they have anything special for lithium, but because they've got a way for removing a nasty impurity called boron, which is actually also has commercial value. When you look at what they add to their annual report, it becomes very interesting of what they might be thinking internally that they're not sharing with us. But there's other signs of things like not going right, such as why aren't they filing this 10K form on the Canadian regulatory platform, CEDAR? On early February, 4 million options at 13 cents expired. Only half of them were exercised, even though the stock was double the price at the time. The CEO, George Putnam, and John Thompson, their guy in Australia who takes care of Ningen, they exercised all of theirs, but some directors didn't exercise any of them, and some exercised only part of it. Is this a vote of non-confidence by these board members in the management of the company, or what? Unless it's a sign that they are nowhere near getting a critical metals recovery plan going. And that's why the stock has slumped in the last while, because the market, the 55% held by non-insiders, they have no idea where the company is in this cycle of trying to get this hosting deal. And once they do get a hosting deal, well, they would first create a pilot plan to demonstrate how it would work, and then they build a commercial plant. And the 10K actually spells out how long all this would take. And that's what's depressing too. The 10K suggests that they wouldn't be in commercial operation until the middle of 2023, which is, for those who have read that 10K, they say, oh, nothing seems to be happening with this company. But, I get the vibe from the company that they are working full tilt to get this deal. Ultimately, it's in the hands of a Freeport or a Grupo Mexico to do a deal. Once you do the right deal, then that becomes the template for doing more such operations. And the amount of scandium that could come out of these copper oxides is quite substantial. I've done some back-of-the-napkin calculations, and there's over 200 tons of scandium oxide that could be recovered annually from this source. And Rio Tinto, from its lactose source that it processes at its Sorel Tracy facility, its theoretical upside limit is about 50 tons. So from a positive perspective, Rio Tinto is now doing the heavy lifting of incrementally building supply of scandium oxide to coax the end users to start using the aluminum scandium master alloy in their products. And if Scandium International kicks in with its own parallel critical metals recovery system, which also allows it to branch into recovering other materials such as manganese, nickel, and cobalt in pretty high purity form where it can be converted to the sulfate version needed by the battery market. Then this stock would absolutely come to life. There'd be plenty of financing lined up to make that $1 million liability disappear and to take care of whatever it takes to build the first version. And Ningen itself, it's sitting there in the background. They have their mining lease back. They would still need to do more permitting, but until the total global market hits sort of 50 tons per annum of demand from all this incremental supply, the ability to get the orders to justify building a primary mine such as Ningen, that won't happen until then. But there is now hope that the scandium offtake market can be grown through this incremental supply from Rio Tinto and from Scandium International if it can just ever get a hosting deal done and start doing critical metals recovery from the copper oxide raffinate.
We'll have more with John Kaiser right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with John Kaiser. John, is it time for Discovery Watch to say adios to GT Gold?
Well, last time I talked about GT Gold was in May of 2019. They'd gone from the South Saddle gold epithermal system to making the North Saddle copper gold discovery. The stock had responded well, and there hasn't been much to say about the company over the past year. However, March 10th, GT Gold got a friendly cash takeover bid at $3.25 from Newmont, which values the company at about $450 million. Newmont entered the picture in mid-2019 through a $17 million financing, and they invested another $8 million in late 2019. So they're into this company with about $25 million investment, and they own about 14.5%. Now, they finally got a resource estimate published in early July of this year. The grades were not high like one might have hoped. However, this type of porphyry system is the kind that has a lower grade open pitable shallow portion, but the copper and gold grades get richer as you go deeper. So they published a resource for both an open pit mining scenario and for underground block caving scenario. And this is sort of similar to what's happening at the nearby Red Chris deposit, where the open pits are going to be depleted at some point, but the richer ore will go underground. And that's what attracted Newcrest, which has the Cadia Hill gold mine in Australia, to that project. And Newmont stepping up and taking over, this is a sign that these big gold producers are looking for these large ounce systems, because the resource indicated and inferred combined for that open pitable and underground version, it totaled about 4.8 billion pounds of copper and about 10 million ounces of gold. Not super high grade, but it is there. Now, one of the things that emerged late last year was a shareholder that had gotten involved in 2018 called the K2 Principal Fund suddenly put out a press release expressing unhappiness with the chairman, Ashwath Mehra, who owns about 13.5 million shares, and his corporate governance practices. And that was the first sign that somebody was officially unhappy with how the company was being run. And the stock has been volatile, up and down, and people thinking, well, this thing should be, much better, trading much higher. And not long after, in early January, Carson Block's Muddy Waters, which normally keeps itself busy shorting stocks that they think are overvalued, joined with a 10% stake, joined with K2 as part of the dissident shareholder group wanting to remove the Mera and his supporters on the board and put new people in there. Well, this takeover bid ends all the squabbling about that, and Mera gets a $40 million payday for his 13.5 million shares plus whatever options he has. But the story doesn't really end there, because one of my bottom fish that I've been watching, Fancamp Exploration, somehow managed to attract him as a director in 2013 when the company was involved in various disputes with other groups regarding the iron assets that they had developed. And the person who's been behind Fancamp, Peter Smith, he was there in 1987 with Charlie Robbins. They took it public. Charlie Robbins passed away a year or so later, and Peter Smith has kept this company alive for the past 30 years. They've only done one 2-for-1 rollback at the end of 1999, and there's 160 million shares out. Peter Smith has a decent stake in it. A Saskatoon real estate guy called James Hunter recently showed up as a 10% plus shareholder because he could see the asset value of the company. And there's apparently other groups that own significant numbers of shares in this company. And what this company is a strange company in that it has been this sort of collection box for Peter Smith, who focused on Quebec, and he either looks at if there's some new discovery of something interesting somewhere, he will go there and think where else is there something similar, and he'll acquire it. But he also rummages through all the assessment files, looks for projects that have come open, and he acquires these projects and tries to farm them out. The problem is he's pretty disorganized in doing this. He's run it almost like a one-man show. So unlike, say, Jack Stock's Globex Mining, which has over 100 properties, all of them nicely listed on the website, and it's like a catalog for people looking to farm into a story, hardly anybody knows what's going on in Fancamp. And this ended up creating problems for him, because as a result of this similar type of staking he did in 2002, 2004, where he went to the southern end of the Labrador Trough and staked over 15 of these known iron deposits. And at the time, he admits, well, he wasn't thinking Chinese supercycle was coming and this would be brilliant to stake all these iron deposits. He just said, this stuff's open. There's a wealth of information about it, money spent delineating them, but the iron price wasn't right, and so all those deposits came open, and he collected them all on behalf of Fancamp, ended up teaming up with the late Pat Sheridan in a 50-50 deal. As with anything to do with the late Pat Sheridan, that ended up in squabbles too, but eventually that got resolved, and in 2011, when we had that post-crash boom in iron, he raised over $14-15 million for those assets and advanced them. And then ended up doing a deal with Champion Minerals, which eventually became Champion Iron, and sold a whole bunch of these projects to Champion Iron. And what was left in the company at the end of the day was a bunch of shares of Champion Iron, some of which have been sold. So the company has $10.5 million cash and about $15 million worth of Champion Iron, because of course iron prices are 160, 170. They're even higher than they were back in the earlier boom. And what's happened is last year, through some finessing done by Mera, who only owns 1 million shares, and his pal Mark Billings, who owns even less, they managed to marginalize Peter Smith, make themselves chairman, and bring in a new temporary CEO. And now that they've disenfranchised the person who's run this company for 3 decades, they've done a kinky deal with something called ScoZinc, which owns a defunct zinc mine in Nova Scotia, in which Mera happens to have a significant stake along with his associates. And now they're doing a deal which would give a merger deal, which supposedly no voting is required on by anybody, but which will give the Go Zinc shareholders 55% of the resulting company. And what this clearly is a cash raid to get this Go Zinc going up again. You get it up and running again, and who knows whether that's going to be profitable, and to give Mera and his cronies a substantial stake in FanCamp so that if there is any dissident shareholder dispute, it won't happen. And they have postponed last year's AGM several times under the name of COVID. Now it won't happen till June. And so they have used the rules and that, exploited them to disenfranchise the the majority shareholders of FanCamp, so that this deal, which does not look at all good for FanCamp, can be consummated for their benefit. So whatever Muddy Waters and the K2 Principal Fund were complaining about when Mera was chairman of GT Gold, it looks like he's at it again. And for people who don't know who he is, well, he lives in Zug, which is a place in Switzerland, which is the home base for his mentor, Mark Rich, the criminal who Bill Clinton pardoned and who ended up creating Glencore and is known for all kinds of interesting trading activities during his career. So we have to say goodbye to GT Gold. That's the best price I think we've seen for the stock. But the chairman's off to do something unpleasant for minority shareholders in another area, and that's FanCamp Exploration Inc. And that's a company whose cash breakup value is 20 cents, and it's trading at 10 cents. And they price a company that has no money, just an idea to spend money, at that 50% discount to the cash breakup value without giving any value to these dozens, some say maybe 60, 70 properties that Peter Smith has squirreled away inside the company, which if he actually got a proper team together could make this company into a very interesting company, much more valuable than the low price range it's been in, because it's been a one-man show with a board that hasn't been particularly helpful in getting anything productive going for all the rest of the shareholders.
We'll have more with John Kaiser right after this.
Aven Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aven's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avenresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're chatting with John Kaiser. John, has Opus One finished its winter drill program at Noyelle in Quebec?
Well, Jim, we keep talking about Opus One Gold because I've treated them as this sort of canary in the coal mine about the market sentiment. They managed to finally get their drill program going on January 25th. It was a week or so late because there was such a warm winter, the ground wasn't frozen until then. But on Monday they put out a press release that 2/3 of that 13-hole program has been done. They also put together a corporate, actually more technical presentation about the drilling so far, which they've made available on their website and which they are showing to delegates of the PDAC virtual conference. They have a virtual booth in that. So Louis Morin, the CEO, and their chief geologist, Pierre O'Dowd, have been hunkered down in a room waiting for the virtual doorbell to ring. But they haven't really had much luck. The only delegates visiting them have been those trying to peddle properties or services, neither of which they need right now. So I managed to get through to them and have a pretty good presentation of what they have accomplished, and it is quite interesting. The Noyelle project, it's got a zone in the main target area they call Zone 1, and they decided to drill 8 holes down plunge from the previous drilling. They managed to get only 2 holes done last year when COVID came along and they had to abandon the drilling program because of the lockdown orders. So they've drilled the first 8 holes. Holes 1 to 3 or 1 to 2 are probably not going to be interesting. Hole 3 might be interesting. Part of the purpose of this program was for them to develop a proper geological framework for interpreting this system. And they now have a pretty good understanding based on these results. They do not have assays, but they do know that they're dealing with a zone of that's been sort of quartz flooded, and then stringers of different phases of sulfides have come in. The last phase, the arsenopyrite, is the one that seems to be associated with gold. And wherever they see this quartz horizon riddled with these stringers, that's where you end up getting the gold grade. And it seems to be running 4 to 11 meters thick. And they've holes 4 to 7, they've managed to hit this down plunge. They expect to start getting assays in about a week. And the key here is they're looking for grades in the 5 to 7 gram per ton range. And what really has Pierre O'Dowd intrigued by this project is its potential vertical extent in the main target area. Right now they've got a 400 meter wide by sort of 200 meter high zone running 4 to 11 meters thick, which is running these good gold grades. Occasionally it spikes to 20 grams per ton, but this is not one of these high-grade visible gold quartz vein type of systems that you find in Quebec. This is a different kind, and it's sort of this interesting package where you have this south east-west fault dipping to the south through these gray wacky metasediments that are typical for that deformation zone in the Casa Berardi area. But there's a horizon of iron formation, which seems to have been the cap for fluids that migrated up that fault structure, which is all graphitic and broken up. And the quartz developed first, and then these later sulfide pulses came in, and they now think that, wow, all we have to do is track this marker horizon, this iron formation, down plunge, and beneath it, wherever we see the quartz with the sulfides in it, that's where we're going to get the gold zone going. So the market's potentially going to have a pleasant surprise in the next 3 to 4 weeks when they start getting the results, in particular 4 to 7. If those deliver the gold grades that they saw earlier in hole 2 of last year, then there will be a lot of support for the model that they've developed through this year's drilling to understand what is this all about, where can it go, and how big can it get. And I've calculated that for that 400 meter wide segment of the main target area, that's about 800,000 tons if you take sort of a 7 meter thickness for it. And if you end up having this 6 gram per ton grade, that's about 0.2 ounces of gold, you would end up, if you stretch this down to 1,000 meter, you're looking at a target with potential 1.5 million ounces in it, with $300 plus rock value at $1,700. The company can't, of course, map any of that out because that's forward-looking, and they can't even tell you about it. But if you ask the right questions, you can tease enough information out of them to say, okay, this is what's going on. So the next round of drill results that we get from this winter's drilling, that will tell us if it's game on. They will have to raise more money. This program costs $1 million, and they'll only have $700,000 left. If they want to drill during the summer, they will need to apply for a road permit, which might take 3 months. So that's something to watch carefully for in the next month or so to see if they can get the permit. And then to build the road itself, it would be only 6 weeks. The entire area is swampy. So what they do is they lay down this special membrane, and then they truck gravel onto it and basically create this membrane gravel-filled road that literally floats on the swamp. And they would take that 10 kilometers into where the main target is on the Noyelle project. And for drill pads, well, they just extend, make little spurs off this road. And then then they could be able to drill in summer. The earliest of everything actually works out would be September, but they will be away from this problem of only being able to get in there and drill in sort of January, February, up to about, early mid-April when spring thaw begins. So it's a pretty short window for drilling. So that's one of the things we'll be watching for in a future Discovery Watch episode is, do they have what it takes to justify building a road in there and turning this into a year-round discovery delineation story?
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser. I'm your host, Jim Goddard. You can find his website at kaiserresearch.com.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.